Hey everyone, in this flow review, we're going to cover unusual options activity on numerous strikes that hit the tape prior to a significant news release announcing a joint venture between Volkswagen and Rivian Automotive. Before we get started, Unusual Whales is having a summer sale until July 28th. Get 15% off or 20% when you upgrade your current subscription to a higher tier. After the market closed on June 25th, the world's second largest car maker, Volkswagen, announced a joint venture with electric vehicle company Rivian. As part of this agreement, Volkswagen is to invest $5 billion in Rivian, and the two companies will collaborate on software for electric vehicles. Prior to the news, the options market seemed to insinuate that maybe someone knew this news was coming. Notable flow on Rivian was spotted on the morning of June 25th, when 5,010 contracts of the Rivian $14 call for June 27th hit the tape at a price of 5 cents per contract. This was unusual as Rivian was trading at just $11.73 per share when these orders came in, placing this contract 19% out of the money. What made this more unusual was the fact that at the time of the orders, the contract had just 3 days until expiration. Just minutes later, another contract saw similar treatment, the $13 call also for 6/28 expiration. 4,051 contracts of the $13 call hit the tape at the ask of 12 cents per contract, while Rivian traded at $11.99 per share. This contract was 9% out of the money at the time of filling, again with just 3 days until expiration. Users in the extended Unusual Whales Discord community noticed these trades, with one user noting them as unusual and commenting on the initial losses experienced by the contract shortly after the fills hit the tape as Rivian pulled back slightly intraday. Now, although those June 25th orders were extremely unusual, we actually noticed something different. We can head over to the overview page and note on the 14-day net premium chart, we can see that every single day, dating back to June 6th, save for the 11th, Rivian didn't experience a single day with negative net call premiums. And in fact, since the 14th, they didn't have a single day of net put premiums either, this red line. This net premium chart shows us very clearly that for, at a minimum, the last 14 days until the news dropped, Rivian didn't experience any net bearish options activity. Every single day was showing bullish sentiment in the options premiums. Now, once that news dropped, the reaction from investors and after hours was fairly instantaneous. We'll head over to the chart next. And I'll flip this to a little bit of a higher time frame to clear up some space here. But we can see that after the news dropped, Rivian ripped in after hours trading from around $11.91 per share all the way up to a high of $18.90 per share, a nearly 59% move in the stock price. On the morning of June 26th, the traders who, innocently and luckily, I'm sure, saw a massive gain on their contracts. Both the $13 call and the $14 call, expiring on June 28th, 2024, were nearly 10% and 20% out of the money respectively just the day prior, now found themselves deep in the money by market open. The $13 call, which was opened at 12 cents per contract, reached a high on the contract of $3.85, a 3,108% gain. The $14 call for 6/28/2024 opened for 5 cents per contract and hit a maximum high on June 26th of $2.56 per contract, a 5,020% gain. Now, the nature of this flow just one day before news and all of that bullish activity that predated the announcement by weeks is certainly eyebrow-raising. What do you think? Were these traders just lucky, or did they have some knowledge? Either way, it's unusual. And remember, don't miss out on the opportunity to get Unusual Whales at a discount. You'll get 15% off and 20% off when upgrading to a higher subscription tier.